Welcome to the Edge Market Update. It is May 12th, and we had a May USDA crop report today. It's one of the biggest reports of the year, and one of the first things looking at that was the new crop estimates came in for corn at 181.5 bushels per acre nationwide, which would be a record crop. The record in 2021 was about 177, and so this would beat that by about 4.5 bushels to the acre. And then for soybeans, they estimated a 52 bushel per acre crop as well, which would also be a record. And then moving on to carryout for old crop, the corn carryout projected for this upcoming next year was 2.2 billion, which was higher than the estimate of 2.1 for the trade. And then the soybean carryout came in at 335 million versus a 293 million bushel estimate. So those were bearish numbers as well. And then the other bearish part that was more of a surprise for the report was soybeans for the world carryout came in at 122 million metric tons, which was versus the 108 million metric ton estimate that the trade had. So new soybeans really sold off hard today on that news. But in general, it was a bearish report for corn and soybeans, which was expected because they always use a trend line yield, which always increases each year with the past performance that we've had. So obviously a lot of time left in the growing season, but it is what it is, and the trade reacted to it today. So we have this out of the way. Now traders are going to focus on North American weather and different geopolitical events going on in the world. But we'll go ahead and get started with the old soybean chart here. We're still on the July contract. And as you can see here, we have our long-term support at 1383. And we almost tested that again today. We tested it yesterday at 1385, but long-term support has held. Resistance in the short term is at the 9-day moving average, which is 1414, followed higher by the 20-day moving average of 1431. We have an intermediate, a negative trend line formed here, which would have a pretty good resistance level in the 1470s as well, but for now, that's a ways away. If this does not hold as support next week, this 1383 level, we can expect to test somewhere in the 1360 to 1350s. And then we have the July lows last year around that $13 area. So hopefully this support level holds into next week. If it doesn't, we could expect further weakness down to those levels as well. Strength indicators are creating some positive trend here, but really we need some positive price action early on next week to keep these at a positive trend, or else we could risk going back lower here. In the short term, our money flows are very oversold, so that should help build support, but that's just one of the factors. And then our longer term momentum continues to decline here as well. Would like to see that flatten out and turn back up to the neutral line, but we still have some work to do there. Moving on to new crop soybeans, we really experienced a sharp sell-off today based on that data that I just shared. We have a negative trend line formed here, which would be a resistance level in that 1285 area. We failed today at pretty decent support of 1247. So we traded under it yesterday, closed above, and then after that, after the crop report came out, really saw some bearish price action, fell below support and closed there. If we look back to July of last year, we have different support ranges from those July lows at 1215 up to 1227. So obviously we're here. Hopefully that can hold as support. And so ideally next week I would like to see price kind of hang out in this area, start to build some support, trade there several days, and hopefully we can get back up to this resistance level at 1247 and potentially break out above there. Strength indicators are very weak right now. Money flows are extremely oversold. and our longer term momentum remains in a negative trend line here and also moving lower. So it is a pretty bearish chart, but if we do have some type of a weather scare or anything like that, certainly price is set to pop based off of how oversold it's been the past few weeks here. Moving on to old crop corn, we've held long-term support here at that 575 level. We bounced off of that today and finished above, close to the 9-day moving average. So that was actually a pretty healthy reaction after the report. Intermediate negative trend line resistance is at that 650 level. We have some moving averages. The 20-day is at $6, which I would consider that to be pretty heavy resistance right now. That's where we failed at last week to move lower again. And then above there, we have the 50-day moving average at about $6.13 a bushel right now. Strength indicators are creating some more positive divergence here, so that is bullish in the short term. Still need some follow-through price action early next week to confirm that. Money flows are a little above neutral, so just continue to monitor these areas. Long-term momentum is flattening out again, so that is probably the most bullish momentum indicator of the 4 contracts that I track, but hopefully that does flatten and moves higher to that neutral line. And then to finish up with new crop corn, we did break support at 512 today on the May crop report release. We closed at 508, so we closed off the low, which helps, but would really have liked to see that 512 area recover before the close. So ideally next week we can consolidate in this area and hopefully get back above this old support area and keep moving higher. We do have resistance at the 523 level. That's a 10-day moving average. We did have a lot of selling volume today on new crop corn. Strength indicators are still weak. Money flows are oversold, and momentum still remains to keep heading down here. So it is a bearish chart, but again, if we do get some type of weather scare at some point, we always seem to get some type of a bullish event at some point during the growing season. These contracts are primed to have a short covering rally based off of how many contracts Managed Money has sold the past few weeks. So at some point we should get some type of a scare, and when that does happen, we need to react and take proper action when we get some stronger prices here. When some of these technical indicators recover to stronger levels, we need to consider taking action through grain sales or hedging, but we're just simply not at that time yet. Thank you for watching. Please remember that it's Mother's Day on Sunday, and if you have any questions, reach out anytime, and we want to thank you for your business. Have a good weekend.